welcome to our 2024 Investment and Economic Snapshot. I'm Joel Carty, and today we'll be reviewing the markets and macroeconomic developments over the past year. Let's dive in. 2024 was a strong year for equity investors, with resilient economic growth and robust corporate earnings, particularly for US companies supporting equity markets. Moderating inflation paved the way for easier global monetary policy, which further supported equity market sentiment. However, bond markets ended a volatile year well below their best levels. Let's take a look at the key developments month by month. In January, the stock market recovery that began in November 2023 consolidated. The Fed pushed back on optimistic rate cut expectations, leading to weaknesses in bonds and interest rate sensitive sectors. However, Australian and US equity markets enjoyed modest gains, and Japanese stocks performed exceptionally well, finishing 8.4% higher. In February, global stock markets surged to record highs, fueled by strong earnings and anticipation of rate cuts. The RBA maintained the cash rate at 4.35%, while the Fed hinted at a potential delay in interest rate cuts due to strong jobs data and surprising inflation figures. In March, Australian and global stocks continued their good performance, supported by resilient economic data and moderating inflation. The Bank of Japan increased its policy rate for the first time in 17 years, and gold rose 8.3%, driven by central bank purchases. In April, stocks and bonds experienced a pullback due to surprising inflation data in Australia, and the US geopolitical tensions flared after Iran's missile attack on Israel, pushing gold to all new-time highs. In May, global markets rebounded, led by the US chipmaker Nvidia, which experienced gains of 25.5% following strong earnings. The RBA held the cash rate steady but communicated a more cautious outlook. In June, global stock markets rose, led by technology stocks. The European Central Bank reduced interest rates, and the ASX welcomed Guzman and Gomez, the largest listing since 2021. In July, global equities saw significant gains despite increased volatility. Australian and US equities reached all-time highs, with a sector rotation favouring small caps, cyclical and value-oriented companies. In August, global markets continued to experience significant volatility, but ended well off their lows. US markets rebounded, supported by strong GDP data and earnings, while bond markets rallied as inflation moderated. In September, global equity markets surged, buoyed by a significant rate cut by the Fed and aggressive Chinese stimulus measures. Commodities rallied, with gold up 6.2% and copper rising 12.9%. In October, equity markets pulled back marginally, while government bonds saw high levels of volatility. The US presidential election added market volatility, and the US earnings seasons produced stronger earnings, overshadowing a disappointing outlook of some of the mega-cap technology companies. In November, equity markets rallied, following a resounding US election victory for Donald Trump. US and Australian share markets gained significantly, while other global markets lagged. In December, global equities experienced a subdued finish to the year. The Fed announced an anticipated third consecutive interest rate cut, but bond and equity markets reacted negatively. Despite this, the MSCI World Index achieved a substantial 19.2 gain for the year. As we enter 2025, we maintain a constructive outlook for global economic growth and performance of both equity and bond markets. However, the path of returns is always unlikely to be smooth, with various risks that could influence our expectations as the year unfolds. Thank you for joining us for the 2024 Investment and Economic Snapshot. Stay tuned for more updates and insights throughout the year.